And I don't think a lot of people know about FDIC insurance. I know I didn't.
A lot of people think that it's just $250 per person.
$250,000 of insurance per person.
Right. Yeah. But it actually, FDIC insurance does different categories. So joint accounts, trust, beneficiary accounts, single owner accounts, retirement accounts, they are all in different categories, business accounts too. So you can easily, if you have your accounts titled correctly, you can easily be insured at a bank over $2 million, easily.
Wow.
You're listening to the Isn't That Rich podcast, and we're your hosts, Jill Franks
and Ashley McVicker. As young females in the banking industry, we love simplifying the confusing yet everyday questions you have about money.
Like, how do I get my finances in order?
Where is my money really going?
How do I invest for my future?
How do I make my money work for me?
Can I really afford to buy that new home?
These are the questions that keep us up at night. And the truth is, no one was born knowing how to handle their finances.
And chances are, walking into a bank to ask for help seems intimidating.
Whether you're a single person in your early 20s saving for your first home,
or you're an empty nester wondering what to do with that extra spending cash,
this is the podcast for you.
And we have a special guest here today. Christine Hankins is joining us. Christine is the president of retail banking at Farmers State Bank, and she's been working in the banking industry for over 20 years. And during her time with Farmers State Bank, Christine has played a major role in our core deposit growth, totaling more than $20 million in deposits, which is super impressive.
Yeah, as president of retail banking, Christine and her team deal with financial fraud on a regular basis. Through her firsthand experience in seeing fraud take place, she has become an expert in identifying fraud and helping it prevent before it takes place. So welcome, Christine Hankins.
Welcome,
you,
Christine.
Guys. Oh, we're excited. I'm excited to be here.
We're excited to have you. Good. So, Christine, tell us a little bit about yourself and your journey with Farmers State Bank and your journey in banking in general.
Okay. Well, I graduated college in 2003 and went straight into banking. And so I have done that my entire career and joined Farmers in 2017. And since then, it's just been really exciting. It's gave me a different outlook on banking and changed the way banking has changed over the years. And I feel like Farmers does it a little bit different than others, maybe. And the way we think about our customers and how we want to partner with them and, help change their lives for the good, just their future and goals, and just being more, instead of transactional banking, we're not just wanting to take deposits or do loans. We want to grow with our customers. And so that's exciting.
It is exciting. But you haven't always been the president of retail banking at Farmers. You had a couple other positions when you started, right?
Yes. So I have started out as a teller at Farmers, and in other parts, other banks. I have done new accounts and customer service and mortgage and loans. And so, yes.
So you've kind of had a little piece of every position at the bank. In every department.
Yeah. So it's been good. It's been exciting and always changing. And at Farmers, I get to wear many hats. And so every week is different. Every day is different. And so I truly love to come to work.
Good.
Yes.
Awesome.
And you're always bopping from branch to branch, aren't you?
So I get to work with everybody and just get a little bit of every department. So, yeah.
That's fun. So if I am a customer, I know our whole episode is about savings. So when a customer comes in and they sit down, you talk about the kind of questions that you ask them and making sure you're getting to the bottom of their goals. So what should a person be prepared with when they walk into a bank?
What should you be thinking about?
Yeah, like when it comes to saving.
Because if it was me, I would just walk in and be like, I need a bank account. But
right.
I don't know. I need to think about maybe my goals and stuff.
Absolutely. So, well, one of the first questions is just like, how much money do you plan on investing? And balances, right? Like what's your average monthly balance in your checking account? Because we have multiple checking accounts, and some, if they have higher balances than others, they have higher rewards.
Can I stop you and ask you a question? Has anyone, when you asked that question, gotten a little squirrely?
Sometimes,
Like, whoa, I'm not telling you. Has anyone not told you?
Yeah.
Yes.
What's her business knowing how much I'm going to keep in their
yeah,
account?
yes. And it's really, truly, we try to first ask situational questions, and that is the situational question, because we've got to figure out what product to put you in. And we have so many different ones. If we don't ask situational questions, I always tell everybody, do not throw out names of products. Do not just put somebody in a product until you've asked them questions of how they're going to use the account. And we have so many good people at Taylor Shanks in Harrisburg. I mean, she literally interviews those suckers, I say, but the customers, she interviews them so well. And it's because truly in her heart, she cares about their future and to make sure they're in the correct account. So it's really like an interview process, to be honest. And
Well, I think that's so good because I know I was so nervous when I opened a bank account. I just went in, I didn't ask any questions. I walk out and it definitely wasn't the right account for me. And I have no idea what I got myself into, and my account is no longer open. So if you're not asking those questions, then
absolutely,
it sets them up to fail. Yeah.
And when you leave, we want you to feel like comfortable with our bank and that you can access your money. So, I mean, a non-negotiable for us, unless the customer does not want it, we want to set you up with online banking before you leave. We want to make sure that you have all the tools that, can help you with your day-to-day banking. So I think some people are intimidated about switching banks or coming because they're like, oh, I've got to get a new app. I've got to learn a new online banking. I've got to switch this. I've got to switch that. And we really try to do our best to, if they have time to sit with us, like walk them through every step to be able to have that taken care of before they leave. So that's another good thing.
So what's another question you ask when you're opening a bank account? Especially when it comes to, like, I would say switching stuff over.
Yeah. There's so many questions.
Like, think of how much your bank account's maybe tied to stuff, especially if, like, you're older, you have kids, you have all these subscriptions. Like, what does that kind of look like?
So I think next, after the situational questions, we really talk about, what's important to them. There's so many things, like it might be the relationship with us and how do they want us to communicate with them. So like that's super important to us. If it's not easy to get a hold of you by phone, then if email or texting is easier, we want to know that because, and it seems like we're finding that out, that it's harder to get a hold of people by phone. I mean, you get all these telemarketers and fraud calls.
Yeah, no one's answering the phone.
Yeah. So how do you want us to communicate with you? What's important into not only a checking account, but maybe what's important with your long-term goals? Like, have you thought about, are you sending kids to college? Like I will be soon. Are you wanting to buy a retirement house? Are you, what are your goals and what are you saving for? So we like to ask those types of questions. And with businesses, like what excites you? Like, why did you get in this business? Like
what their goals are for the future.
Right.
So not thinking about just short term.
Right.
But in the future, what are you saving for? Right?
Yes. Yeah. So businesses have a lot of similar questions, but we just want to get to know you. And as much as you want to get to know us, we just have so many different options. One thing is we're really passionate about is retirement and saving for retirement. And so we might ask you, what that looks like. Do you have an IRA? Because we can offer IRA accounts here. Are you contributing to your 401k? If your employer offers that. We're really passionate about saving, like putting that 5 to 15% back first. We call it the financial freedom account. So if you don't have that set up, we can absolutely set you up with an IRA here at Farmers State Bank, and you can even add to it monthly. So every time you get paid, you could have 5 to 15% transferred. You could make, like, some people make one-time contributions, like throughout the year. They might do it when they get their taxes back or around tax time, because it also can be a tax deduction for them. And a lot of CPAs will refer them for an IRA that way. but a lot of people don't know that you can add to it monthly. We definitely want you to do your 401k plan first and foremost if you have that option with your employer. So that's super important to us. Other questions are like, what do you want to do for fun? Like how, because in a budget, you do need to name every dollar, right? And some people think a budget sounds scary or it doesn't sound fun because you might not get to do the fun things that you like to do. But actually having a budget and naming every dollar can allow you to do fun things like go on a vacation or, whatever that looks like to you. So we like to ask those questions as well. And do you want a percentage every time you get paid to be put in a fun account? And we can open a separate account, savings account that is labeled fun, vacation.
I think that people, I know that when I was growing up, I would ask my parents, like, why do I have a savings account? Like, what am I saving for? I never understood it. And they had to almost sit down and explain it to me, like, why do you want to save? And so those questions are so important when you're sitting down with someone opening their account, because I do think there's kind of this misconception of just have a savings account. And there's a difference between an emergency fund and a savings account.
Yeah, I love that you brought up emergency fund because that's another account that you really absolutely have to have. So, like, number one, in my opinion, I would do your 401k, your retirement, your IRA. You got to do that. You got to be prepared for the future. We don't know, if Social Security will be around with the rising costs. Like, you have to be prepared and you want to be able to retire. So if you can start at 21 years old when you get your first job, or as soon as you graduate college, or maybe you're going into the workforce at 18, you need to start saving for your retirement at that time.
So your number one savings account that we have would be
the IRA.
An IRA, or to even put it on someone's mind.
Yeah, like the first question you had to ask, or tell someone what you think you should save for is for your retirement.
Yes. Pay yourself first. That's got to happen first. But then second is the emergency fund that you just talked about.
And can I ask you really quickly, because a lot of people don't know this, but you don't only have to have one savings account at a bank. You can open multiple accounts. Is that right?
Yeah.
Okay.
So we would recommend, if you're all in on this, to open multiple accounts, and then every time you get paid, make a transfer. You can do that on your app online. You could have it automatically set. You could have a certain dollar amount set. We could do that for you. We can help you set that up. It can look differently, but we can absolutely title accounts different. And lots of people do that. They might put money for their tax and insurance, like when they pay their real estate taxes, they might want to have a separate account for that. So you can get really detailed and set it up how you want. After the retirement, I really think that emergency fund is important. We say that everyone should have at least 3 to 9 months of their income saved and put away. So,
and what kind of account would that look like? Is that interest bearing, non-interest bearing? Do you see it on your mobile banking? Do you hide it? What does that look like?
Those are such good questions. And that kind of gets to be up to you. I think absolutely do interest bearing and hide it on your mobile app. You can set up an automatic transfer in-house with us where it automatically transfers, but then you don't see it online because it's emergency. And we don't want to accidentally pull from it to have a weekend in St. Louis or buy concert tickets, right? This is for maybe you lose your job. So I'm just seeing all these small businesses close. And you just really don't know when something could happen, right?
Right.
So you could easily lose a job because a small business can't make it and you're left, out of here. But also, you might have to have a big surgery. You might have to have back surgery, a hip surgery. You might be out for 3 to 6 months unexpected, and you might not have a backup plan, an Aflac plan or an insurance plan or something like that. But also, things come up like you might have your roof blown off. I mean, your furnace might go out. Like, you need an emergency
It will go
fund.
out one day.
Yeah.
It's not a might. It will.
Yes. So,
And you'll be happy if you had a savings account
And it
for
will be the coldest day of the year that it does go out. No.
emergency fund for those types of things, not to have a weekend away. That's your fun account. So yeah, no, we want to help prepare you, and you don't have to, it doesn't have to be overwhelming. You don't have to do it all at once. You could do, one account to start with and then add them as you go, as you get more comfortable. But yeah,
I love that. So we kind of got, we talked about determining the goals, and then we know we want to make them think about saving for the future in case of emergency. So when they sit down with you, I want to really go through the different types of accounts.
Okay.
And really get into what they are and why they would want to put money in that account. So what would be the first type of account that you would talk about?
And let's just go simple, like a basic savings account. If I was like 16 years old.
I brought in money and I want to start saving. What?
Yeah, so our basic savings account is only $100 to open. So and you just have to keep $100 balance. So it's a basic interest-bearing account. You can add to it at any time. You can access it online. We can help label it if you have a certain thing that you're saving for.
Can I stop you just for a second? Because you said something and it was interest-bearing. So I want to talk about what that actually means, because a lot of people might not know when they hear that.
So we pay you interest to have your money at our bank.
Okay.
So
yes. Easy as that. We pay you to keep your money.
Yes. And on a savings account, we pay you monthly. So at the end of the month, when your statement cuts, we credit your interest on a monthly basis.
Oh.
So, yes.
And the more money you have in your account, the more interest you make. Correct?
Absolutely.
So that should encourage you to save.
Yes. Yes. We also have a Christmas club. We haven't talked about that, but like if you're just saving for Christmas and you want to put extra money back, we can open that type of account for you.
And that's a savings account.
That's also a savings account. And you cannot access that till October, and so right up to Christmas. So the good thing about that is you can't touch it throughout the year. So another way to help you save for Christmas and put back for Christmas. A lot of people do the Christmas clubs. I do the Christmas club. It's just nice when it comes Christmas time that you have money set aside.
So does that just automatically transfer into that account? Do you have it set up that way?
You have that choice, or you can get a check mailed to you. So some people like to get a check and cash it, but most people anymore do the transfer where it transfers to your checking account.
Cool.
So week to week or month to month, does it come out of your paycheck though to pay into it?
You get to set that.
However that works.
Yep. You get to set that up. So you get to determine the amount and the days of the transfer. So that's all in your control. So if you get paid every Friday, you absolutely could do a Friday transfer every single Friday. But if you want to do it one time a month, that's fine too.
Cool. So it sounded like with savings accounts, like that you, especially with the Christmas club, that they couldn't touch their money until October. Are most savings accounts set up that way where you can't access your money as frequently as other accounts, or what is the difference?
So yeah, the Christmas club is the only one that has that. All the other savings accounts you can withdraw up to 5 times per month.
Okay.
And
what happens if I do 6? Will it not let me?
Online, it won't let you. It's like a regulation, but you can come in the bank and actually withdraw with the teller. So, so the savings accounts, as long as you keep the $100 balance, the basic savings that we're talking about, you're good. You're good to go.
So is the purpose of the 5 to encourage you to save, like, kind of puts a restriction on you naturally so that you don't spend that money?
Right. So it just, if you're having a lot of withdrawals, you just need to be in a checking account. Checking account is unlimited withdrawals. So we absolutely have people that have accounts that they are saving for a certain reason, but the checking account is a better option because they're going to be withdrawing multiple times a month. So that's why we like to ask all those questions, like,
right, because you might not actually need to be in a savings account, but you can still be saving in a checking account.
Correct, because we have checking accounts that are also interest bearing, so we pay you to bank with us on that. So
people do that too. You can save in a checking account.
Deposits are so important for banks just because that is how we fund our loans. So if I'm able to give you a loan to start up your business, some other customers making deposits and helping that happen. So that's what's so cool about community banks is truly when you deposit your money in a community bank, you're helping your community.
Well, you're spending your money in this area. And I think Mayor Absher said it at the last Marion Chamber Luncheon. If you spend $1 in your town, it circulates 7 times.
Yeah.
And so I would say depositing your money into a community bank is part of that 7.
Absolutely.
Yeah.
Yeah. Community banks are just so special, and they invest back into their community. And the big banks just don't do that.
Yeah.
So
I think we even have a community reinvestment something or another, isn't there? Something where we're required to, all of our loans, there's a certain percentage that we have, like we're required to keep here.
yes.
So that ensures that we do and that it is actually going
Yes.
to the community. Yeah. So besides a savings account and a Christmas club, what is another way to save? And you mentioned checking account. Is there any other savings account types, or should we talk more about checking accounts?
Yeah, so there are different types of checking accounts, and that's where it comes, is a paper statement important to you? If so, we have a senior account that provides interest and free checks and a paper statement. So we have an option for that. And then also we have our Casasa Cash right now, and it's paying a high interest rate. And it's an amazing account. That's what most of our people are getting right now just because of the interest rate, but also it allows unlimited withdrawals. There's no minimum balance. There's no monthly service charge. What I love is there's free ATM, so they will reimburse you up to $20 per month for ATM fees.
That's really cool.
Yeah.
So you get reimbursed for using an ATM?
Up to $20 a month. So
what do you have to do for that? Just bring in your receipts?
Nope. It automatically happens at the end of the month. You get a refund. Yes.
Neat.
As long as those ATM fees are under $5. If they're over $5, if you're in Chicago and you go to the ATM and it's a $6 fee, bring us your receipt. I don't know if
is that a real thing?
Around here, it's about $3 or $4, and so it covers you most places.
Okay,
so
that's really cool.
Yes.
So, what else is cool about the Casasa checking account?
So, I love that we have our debit cards in-house, and they have the tap feature on them, but you can get the debit cards when you open your account right there. So a lot of people might have to wait a couple weeks to get those in the mail. So we have our debit cards right there. We can set you up with Apple Pay, which is a more secure way to pay.
And this is all only with a checking account.
Right.
Correct. Okay.
Yes.
Got it.
So Apple Pay, I use it everywhere that I can, but online offers it, in person offers it, but it is a more secure way to pay. So we'll set you up with that. There's just so many things. Like if you were to need a credit card, we can set you up with that when you come in. So that's why there's just so many different products that we have to offer. We just want to make sure that we get you the right things that you need and you're taken care of when you come in. So
awesome.
And you can pair products together. So I know I have a Casasa cash account and I have it paired with a saver.
Yes. Yeah. And if you pair it like that, which is what we recommend, you get a higher rate on your savings account. That's so nice. Then your reward from your checking account can hop in your savings account. You never see it.
It just
an easy way to save.
Yeah.
Yeah. So yes, I love the idea that you mentioned that. And if you can't have that Casasa, you can't have that higher interest savings account without doing the checking. So yeah, we recommend that you do it as a combo.
Well, and also with a Casasa cash account, if you have over $10,000 in your account, you're only making what after the $10,000?
It's 0.35.
And so if you pair it with a saver and move that excess from that, you get a higher interest rate.
Yep.
So
up to $10,000, right?
Yeah.
Right.
So it's important that your new accounts rep is asking you those questions.
Right.
Like the balance question I talked about earlier that I said people get squirrely over.
Yes.
We don't just want to know to know.
Yes.
We want to make you more money in your savings. Yeah.
Yes. Absolutely. So
Well, cool. So checking is important. And you would say checking in other DDA accounts are just as safe as a savings account, right? For the most part. Yeah.
Yes. Yeah. Some people think putting your money in a savings is more, but it's all safe.
It's all safe.
Yep. You're fully FDIC insured and can be insured in-house up to millions the way we title your accounts. So FDIC insurance has been a big topic lately, and our all of our employees are trained and can use a calculator on FDIC insurance to help you structure your accounts to make sure you have that full insurance.
That's amazing.
So are those questions you ask when you're sitting down most of the time?
Yes, absolutely.
And I don't think a lot of people know about FDIC insurance. I know I didn't.
Right.
So I think that is such an important thing to talk about when you're sitting down with a customer.
A lot of people think that it's just $250 per person.
$250,000 of insurance per person.
Right.
Yeah.
But it actually, FDIC insurance does different categories. So joint accounts, trust, beneficiary accounts, single owner accounts, retirement accounts, they are all in different categories, business accounts too. So you can easily, if you have your accounts titled correctly, you can easily be insured at a bank over $2 million easily.
Wow. And that means what? Insured what? So what if
So
something
if something happens to the
let's
bank,
explain it.
Yeah.
So if something happens to the bank, your money's covered. FDIC has never lost one penny. So they have always taken care of it. So it's just a peace of mind.
So that means if I had $100,000 and something happened to Farmers State Bank, I'm going to get my money.
Yeah.
You're good.
Thank you, God.
You're golden.
Always make sure it's FDIC insured when you go to a bank.
And that's what a lot of people are seeing, these higher interest rates online. And sometimes, and a lot of them are not banks. And so, you need to be proactive, to make sure, what are they investing in? And when you bank with a community bank, they are very conservative, and they do traditional banking where, these other banks, or not even banks, there's all kinds of different companies that are offering higher interest online, and we're getting those calls. And, the benefit of choosing Farmers is that you get a live local person that you can trust, that cares about you, and that it's insured and you're covered. Yeah. So you just really have to find out what's important to people.
Yeah.
It is. And I would think making sure that their money is safe in a bank would be important.
Well, I'm thinking about all this Silicon Valley bank stuff, and people I know, because my friends talk about it, there's this online bank with a high interest rate. And I'm like,
what's the catch?
Are these banks FDIC insured? Like, really, do you know?
Yeah, I mean, some of them are, but
some of them might not be.
Well,
how does that even work?
So
I'm like, how are they allowed to?
Yeah, I mean,
be open for business on the internet.
If you're seeing something online, you need to do your research.
Yeah.
But even if they are FDIC insured, are they making good decisions with their investments and their collateralization? So, I mean.
Yeah, and even if I'm thinking too of a savings account online, if that interest rate is super high, they may have some super high fee to balance that out that you don't even know about, correct?
Oh, 100%. So that
happens. So that's why that's the catch. So
yeah, so that happens all the time, especially with mortgages. And I know we're not talking about mortgages, but like I had a friend that called, and she was a couple days from closing, and she knows Farmers State Bank, and she said, "I'm getting ready to close, and I have like $7,000 in closing fees that weren't disclosed." She was already. Yeah, so sometimes the best rate really truly isn't the best value because there's hidden cost.
There always
that cost you more in the long run. And that happens not only with the mortgage, but also with the checking account. They have hidden fees. And so you just have to really do your research, and especially with online offers like that. So, yeah.
That's so good. So we talked about checking accounts and all the benefits to having checking accounts. Are there any other accounts people can save money in at the bank?
We do have money markets. Right now, I would say our checking accounts and savings accounts just right now look nicer with the interest that they're earning. So maybe that's not like the best account for them, but we do offer money markets, and those might change over, in the past, since I've been at Farmers since 2017, we have had high interest money market accounts. So
will you explain more of what those are? Because I don't understand those.
yes, at one time, if you had at least a $250,000 balance, you earned a certain rate, and then it was tiered. And so if you had over 500,000, it was earning a better rate. So that's why it's so good to come in and talk to us, because our products do change. And if we have something like that at the time, that might be what's best fit for you. So, but at this time, our checking accounts
Are just as attractive, aren't they?
absolutely.
Yeah.
So, yes.
So there's a money market, there's a checking, there's a savings, and then there's a CD.
Yes. So,
Tell us about those CDs.
yes. so-
Certificate of deposit.
certificate of deposit. Those are when you put a certain dollar amount and say it's $10,000, and then you choose your term. So if it's 6 months or 12 months, all the way up to 5 years, and that money you can't touch during that time. If you do, there is a penalty. And you earn interest. We credit that on a quarterly basis. So
Okay.
every quarter we compound, and if you choose that option, you also can choose to get a monthly check of your interest if that's what you want. So we can send you a check monthly on your interest on your CD
So you get what you earned, but you don't get your
principal.
principal.
Mhm.
Okay.
Yes.
Until your term is up.
yes.
Okay.
Yes.
Got it.
So I
So
think
that's great. If you were saving for something for
5 years.
5 years or even a year,
Yeah.
and you were like, I can afford to tie up this money for 6 months to a year
Mm-hmm.
yes.
and not use it.
Yeah.
That's
and
what
you
a
can
CD
get a
does.
higher annual percentage yield, APY. So you can get a higher rate if you use a CD sometimes. So it's good to stagger your money where, you have money that's available to you and not locked up at all times. And then you have money that may be set back for longer term. And that might be something that you put some of your emergency fund in a short-term CD, even if there's a portion of it that you know that you want to not touch, or if you're saving for college or a retirement home or something, you might want to choose to do that.
And CD rates fluctuate as well, correct?
Yes.
Yeah. They depend on the market.
Yes.
Is that right? Yeah.
Yeah.
Very cool. So what is another way? I think the last one, we kind of already mentioned it, and like looking for long-term investments. So you're wanting to save longer than a 5-year CD or longer than a savings bond, even, I guess, like what you're saving for retirement. What are our options?
Yeah. If you're looking to be more aggressive, you can do aggressive investments or stocks and bonds, mutual funds, that kind of thing. And so that's another option of savings, not at our bank, but yeah, that's an option. You also, there's annuities and different things like that. So we have FSB insurance, and they offer some of those things. So we do have people that we could refer you to.
Very cool.
Yeah. So, but I think banking wise, we covered it.
Yeah.
On savings. Pay yourself first. IRA, 401k. And then I'm just passionate about setting up those accounts so like you're prepared for the future.
Yeah.
And we can do that on the business side of it as well. And so we feel like we've mastered that. So
That's
if you want to come to us for a business budget, like we would love to help you set that up. And you can kind of, you can make changes on your own based on what your goals are and stuff.
Yeah.
So, yeah.
So, Christine, if you were to leave our listeners with one piece of advice for savings, what would it be?
I think about just looking at the future, like where you want to be like in 10 years. And that's something I always ask our young people, like, what does 5 years look from now for you? Like personally, with your business, like just be thinking about those things and have them, have them in your mind written down, like, and figure out, where you're going. A lot of people right now, we're just in this fast paced world where we just think about tomorrow. And I'm guilty of that. But just really looking for the future and knowing that, you can accomplish anything, but you have to start early. And so we talked about this already, but like as soon as you get your first job, you need to be saving for your retirement because the time matters. I can put back at 42 the same amount as a 21-year-old, but the 21-year-old is going to have $1 million more at retirement than I am. Yeah. And it's just, you can't get back the time. And so time is so important. So I think savings, try to do a budget and just so you can accomplish your goals and get to do what you want. And it's not all waiting for retirement either. Like my mom always said, like, don't wait till you're retired to like go and see the places you want to see if like traveling is your thing or whatever you want to do. Like, don't wait till retirement. Like, what if you can't in retirement, like with your health or, you don't know what the future is. So make your plans and do, find solutions to help. And we can help you with that, so
That's
to get to be
So
able
good.
to do what you want to do.
I love it.
So
Thank you,
so you
Christine.
can enjoy. Yeah.
I just love it. I love that all you have to say. I feel like we could sit here and talk forever about savings because you're so passionate about it. But I'm so glad you came on today.
Well,
and
thank
sat
you.
down
Thanks for
with
being here.
us.
Thank you.
All right. Thanks
All right.
for listening to another episode of Isn't That Rich? And we will see you next week.
See you next week. So, Jill, where do we go from here?
Be sure to check out our show notes for this episode and also be sure to follow us on social media and subscribe to our newsletter. And we'll see you next week.
See you next week.